Hi, I'm Milton and welcome to Real News Friday. Now, a little bit of change of venue today. I'm at home. I've just had a hernia operation, so how exciting is that? So I'm a bit uncomfortable, but hey, still here to share some news. In terms of sales, again, the last week have been quite full on, 902 sales. Stock level is 8,548. So it's down a little bit on last week, but it's up 3.2% on what it was a year ago. So we're slightly above where we were previously, and we've sort of been watching that trend, but still pretty well about the same. In terms of what's been leased out, there's 678 properties leased last month. Stock levels down at the moment, 2,244. That's down about 3.4% on what it was a week ago, but it's down 16% on what it was a year ago. So we've still got this widening gap in terms of what rentals are available. Now, some other statistics that have come out is obviously the amount of rentals out there is about 1.1% vacancy rate. So it just gives you an idea. It's if you want a rental, you've got to get out there and get out there quick. But the other thing is the longest that sort of properties sit on the market is about 16 days, and that's down 4 days, I should say, on what it previous was a year ago. So obviously rentals are going fairly quick, and that'll continue certainly for the next 12 to 18 months. We can't see that changing. Pressures to rents are still there. Interesting one, interest rates obviously this week is again a topic. I've written down some statistics in front of myself, so mind if you see me wandering off for a second or two, you'll know why. Look, just looking at where interest rates are, and there's such a large discussion, but you've got to keep in mind, if we go back to 1989, the interest rates were 17%. But it's not that long ago that we were in the sort of mid-8s, so it's about 8.5 plus. Back in 2008, 2011, we were at 7.55%. 2015, it was in the mid-5s. 2018, we were about 5.2%. So in 2020, it was still about 4.8, 4.9%. So we're really only going back to where we were. Interesting comparison to say Sydney. Our values of properties are only about 60 to 70% of what they are over there, and people say, oh, that's okay, that's Sydney. But our wages aren't much different in terms of what the average wage in West Australia is. It's only down a very small percentage under what the average wage is in Sydney. So Perth is a very, very affordable city and will continue to be, and that won't change. So I think what we'll see probably a continuance of our current market, probably a little slightly different level, but we've been discussing that for a few weeks now, but that'll certainly continue. I think it keeps it interesting. I think we'll start to see some gravitation of people possibly moving across to West Australia. Employment is another issue. We all know about that. It's very, very low across the country. So hopefully we start seeing a flow of immigration over the next 18 months. But again, that gets back to what the federal government decides to do, and we don't have any control of that. In the meantime, I think what we'll see is probably in the next 6 to 12 months, there's hopefully the completion of some of those homes that are supposed to be finished or built, and hopefully that'll help appease some of the rental market, but also I think it'll introduce more properties to the market. But overall, look, it still looks like it's ticking along fairly well. The trends in the east, I think, will be different to ours, and I think that'll be something we've got to be careful what we compare ourselves to. I've said that previously, but I think WA will continue to be fairly buoyant. So anyway, in the meantime, if you've got any other questions about the marketplace or etc., always happy to help. All the best, and look forward to speaking to you next week. And check out realestateplus.com.au.